A crypto miner just signed a massive data center lease with a top-secret AI lab. Shares surged 20% in one day. But this isn't a one-off, it's the biggest story in tech right now. Let's dive in. On August 10, 2026, Riot Platforms reported Q2 revenue of $174.2 million, crushing analyst expectations of $154.3 million. The stock jumped nearly 20% in after-hours trading. But the real headline was buried in the earnings release. Riot signed a 191 megawatt data center lease with a leading frontier AI lab that's enough power for roughly 150,000 homes, all dedicated to AI compute. This is a massive pivot. Crypto miners own some of, and Riot isn't alone. Across the AI infrastructure space, the demand for data center capacity is reaching fever pitch. Let's look at the other big movers this week. CoreWeave, the cloud infrastructure company built on NVIDIA GPUs, saw its stock jump 19% on August 12 after reporting Q2 adjusted operating income margin of 5%, beating expectations. Revenue doubled year-over-year. CoreWeave's business model is simple: build massive GPU clusters and lease them to AI companies. They're one of the fastest-growing names in the AI infrastructure race, and their margin improvement shows the economics are finally working. Then there's Supermicro. On August 12, the server maker surged 19% after forecasting Q1 revenue of $14.50 to $15.50 billion, well above analyst estimates. They also guided adjusted earnings of $1.01 to $1.10 per share. Supermicro's guidance implies they're shipping more AI servers than ever. The company has become a bellwether for enterprise AI adoption. If they're raising guidance, it means big companies are still buying. Foxconn, the world's largest electronics manufacturer and a key NVIDIA partner, also chimed in. They said AI infrastructure is driving their growth and that smart consumer electronics will see significant growth in 2026 revenues. Foxconn's computing products division, which includes AI servers, is expected to drive Q3 revenues. This is yet another signal that the AI infrastructure build-out is accelerating, not slowing down. Even Intel is getting in on the action. On August 10, the chipmaker announced it was increasing its common stock offering from $15 billion to $20 billion. The extra capital is earmarked for building out AI computing power. Intel's $20 billion raise is a bet that they can catch up in the AI chip race. They're pouring money into new fabs and data center capacity, trying to challenge NVIDIA's dominance. And let's not forget Nebius Group. The AI infrastructure stock jumped 12.5% on August 12 after reporting better-than-expected EBITDA and revenues. The market is rewarding any company that can show profitable AI compute delivery. So what's driving all this? Simple: the AI models keep getting bigger, and they need more electricity. A single training run for a frontier model can consume as much power as a small town. According to Reuters, surging demand for AI computing capacity is drawing institutional investors into data center real estate. Governments, companies, and startups are all racing to build out capacity. This is where crypto miners like Riot come in. They already have the power infrastructure, the cooling systems, and the security. Converting a Bitcoin mining facility to an AI data center is cheaper than building from scratch. Riot's 191 megawatt lease is just the beginning. Other crypto miners like Marathon Digital and Hut 8 are also exploring AI hosting deals. The lines between crypto mining and AI computing are blurring fast. But there's a catch. Not all mining sites are suitable for AI. AI workloads need low latency, high bandwidth networking, and precise cooling. Bitcoin mining rigs are simpler. Retrofitting costs money and time. Still, the economics are compelling. A Bitcoin miner might earn 5 cents per kilowatt-hour mining crypto. Leasing that same power to an AI lab could bring in 15 cents to 25 cents per kilowatt-hour, 3 to 5 times more revenue. This is why Riot's stock popped 20%. Investors are pricing in a future where the company becomes an AI infrastructure play, not just a crypto miner. The multiple expansion alone is worth billions. And it's not just miners. Traditional data center REITs like Equinix and Digital Realty are also benefiting. But the biggest winners may be the companies that own the power itself, utilities and energy infrastructure firms. We're entering an era where compute is the new oil. And just like oil, whoever controls the infrastructure, the pipelines, the refineries, the distribution, controls the market. The AI infrastructure build-out is projected to require over 100 gigawatts of new data center capacity by 2030. That's roughly the equivalent of 100 nuclear power plants. We're only at the beginning. For investors, the key question is, which companies have the power rights, the land, and the operational expertise to serve AI? Riot Platforms is one. CoreWeave is another. Supermicro is a third. But there are risks. The AI boom could slow if model improvements plateau. Or regulatory hurdles could delay data center construction. And crypto mining companies carry additional volatility from Bitcoin prices. Still, the trend is undeniable. Every major tech company is spending billions on AI infrastructure. Microsoft, Google, Amazon, Meta, they're all building. And they need power, cooling, and real estate. Riot's 191 megawatt lease with a leading frontier AI lab is a perfect microcosm of this shift. A crypto miner becomes an AI landlord. It's a story that's playing out across the entire energy and compute landscape. If you enjoyed this deep dive, hit that subscribe button. We're tracking these infrastructure shifts in real time, and the next big move could happen any day. Thanks for watching.